so people can hear the meeting.
We are spaced out now, so it's okay.
Yeah.
I think we can. So it's exactly 4 o'clock. Should get ready. So welcome everyone. First of all, I would like to acknowledge the medical people that are the traditional custodians of the land. I would also like to pay my respects to the elders, both past, present, and extend that respect to other Aboriginal and Torres Strait Islanders who are present here today. Today we have a talk from Professor Hal Parson and Chris Martin. They don't need introduction within CFRC, so they have been forefront in the housing research from the department. And so today they're going to be talking about COVID-19 and how it has affected our housing market or impacted the housing markets in Australia. And without further ado, I'll hand over to Tom.
Thanks very much, Bala. Chris was not listed on the invite, but Chris is going to be a co-presenter. Chris is a co-author of the report. Chris also was the guy who came up with the original idea for this project, so it's very fitting that he's part of the presentation. So I'll cover the first half and then I'll hand over to Chris. So this is a piece of work that we just published this week, and Bala, you might need to activate the clicker for me. So by sheer coincidence, really, we actually published this just on Tuesday, and it's a piece of work that we've been working on over the last 9 months or so, and it's the third in a series of reports, which I'll just explain a little bit further in a moment. But this particular report was going beyond Australia and comparing Australia with 7 other countries, and really. The starting point for this is the start of the pandemic, when not only here but in many other countries around the world, the sudden realization of an economic shutdown triggered the sense that there was going to be a big impact on the housing system or housing systems, and that could be thinking back to previous recessions. It could be a serious and a long-lasting damage that would result from that. And thinking about the global financial crisis, which in many countries meant a big and rapid increase in unemployment, reduced household incomes, mortgage arrears, rent arrears resulting from that, and a bit of a domino effect in housing markets in that recession and many others that have occurred before. One of the most lurid predictions in Australia, which got a tremendous amount of coverage, was the Commonwealth Bank's 3 scenarios, the most extreme of which suggested that house prices could decline by 30% over 3 years. And yeah, this was referencing previous experience, and of course we all know it didn't really turn out that way, but nevertheless the way it did turn out was a massive amount of turbulence. It wasn't that the COVID was a non-event in housing. COVID is a huge event in the housing system in Australia and many other countries, but not in the way it was expected to be. So I'll just try and sort of introduce the report or introduce the presentation in the first section here, and then I'll just go on to say what we think are the key reasons why that disaster scenario, or what many people would consider it as a disaster scenario, maybe a good scenario for people who want lower cost housing, didn't come to pass. And then I'll hand over to Chris, and he'll talk you through what we think are the best explanations for why rents as well as house prices have really taken off in an extraordinary way in the last 18 months or so. So to set the scene, this is a piece of work that didn't involve just Chris and myself, but also our colleague Fatima Rampur here at City Futures, and also Ken Gibb and Chris Foy in the UK at Glasgow and Reading universities. And it's really two reports in one. This is why this presentation and the report as a whole is a bit of a monster, because we could have, I think, written a biggish report just looking at focusing on the housing market side of it. And then we also wanted to talk about the policy responses as well. So it is, it does cover a lot of bases there. It's a comparative study of 8 countries, and they're not particularly scientifically chosen. They are, a somewhat diverse group of high-income countries, but you could have got more diversity in it if you wanted to. I accept that. We thought it was important to include some countries with more similar systems to Australia. So obviously we gravitated towards some of the other Anglophone countries, but also to go a bit beyond that by looking at including some European countries that have different type of housing systems and have different traditions. And the field work, such as it was, because really this is a desktop project, and such as it was, we identified 12 academic colleagues in the 6 countries other than England, other than the UK and Australia, and 6 of them really with more of an expertise on the policy responses side of it, and the other 6 economists or housing market experts who were better qualified to talk about that aspect of it. So we invited 12 colleagues to participate in the project, to give us some of their opinions and their interpretations, and to, just as importantly, recommend where we should look, what are the best grey literature and other sources that we should look at to explore some of these questions in more depth for their own countries. So we did a targeted stats and literature review that came out of that. So this report is the one on the right. They all look a bit the same, but as Chris pointed out, what you can see there is from left to right, the COVID image comes a little bit more into focus as we come to the most recent report, which was Fatima's doing, since she was the designer of the project, as designer of the report, as well as participant in the research. So the first 2 reports are simply about Australia. We published both of those reports last year. And those are focusing more on the policy responses, not so much on the market impacts, on the rental market impact, but not on the house sales impact, actually. Whereas we broadened the agenda to look at the house sales impact as well in the international project. And these are all published through the by ACOS, the Australian Council of Social Service, the peak body for welfare services NGOs in Australia, which has a partnership with UNSW, looking at poverty and inequality, various or many dimensions of that. So the report itself, just to give you an indication of what it covers, we're introducing, or in the second chapter, we look at the income protection responses in the 8 countries, and a bit about economic resilience. We then go on to talk in chapters 3 and 4 about the emergency policy responses on rental housing regulation and on homelessness, and then chapters 5 and 6 are about the market side of it, looking first at house sales and then the rental housing market. And I think to contextualize this a bit further, the sort of the housing focus of it, it's important to recognize that even if when you look at this list of countries, you think, that's a bit of a unimaginative set, aren't they all a bit similar? Yes, but there's actually a lot of variation in terms of how hard these countries were hit by COVID, which you could measure in various different ways, but the simplest way is, I think, deaths per population, and then the economic consequences of the pandemic have also been pretty varied across the 8 countries, as you can see on the right-hand graph. So, the US has got a death rate above all others. New Zealand, you can barely see at that point, and maybe a little bit more now, but obviously that's New Zealand has, until very recently, been almost unaffected. And as far as the economic consequences are concerned, looking at the sequence from beginning of 2019 to 2021, the big dip is reflected everywhere. Australia did quite well though, because that's the dotted red line. And after that dip for really one quarter, recovered in a very steady way, and above all of the other countries. In the end, at any rate, New Zealand paralleling for some of the way. And 3 of the countries are still below 100 at the end of the sequence. So even Germany, which is a relatively resilient economy, on these stats, and the UK and Spain are by Q3 2021 hadn't quite recovered to where they started. And another couple of sort of contextual, comparative housing-related stats here, which I think we will probably sort of refer back to in the analysis of the housing analysis, is again very varied incidence of international students and the scale of tourism in the economy in the different countries. So I think the hypothesis here is that closure of international borders or restriction of international travel, which occurred everywhere, was something that you would expect to have a bigger impact in a country like here, Australia's percentage of or incidence of international students far above any of those other countries. Spain completely right out on its own in terms of being exposed to damage to tourism. So what are we trying to explain here? I mean, the most glaring graph, I think, in the whole in the whole project, in the whole report, is the one on the right here, illustrating the takeoff in house prices in the 8 countries from a starting point in Q1 2019, and for a year or so, the first part of that period, tracking along fairly flat or a little bit of moderate increases, and then during the pandemic, in all of the countries, to a lesser extent in Spain and Ireland, it's true, a rapid takeoff, and over the 3-year period, and New Zealand looking like stratospheric there, and the US also above Australia, which is again dotted red, but something very significant that referencing back to the global financial crisis has proved has had no value here, because after the global financial crisis, countries like Spain, Ireland, and the US saw substantial price reductions, nominal price reductions, which in the case of Ireland, it was almost 10 years, I think, before they came back to near the same level as where it started. House prices in Ireland, I think, were 50% below where they started after like 2 or 3 years into the recession that followed the global financial crisis. And even in the US, house prices didn't get back to zero until about 2014 nationally. So this didn't occur at all this time. In none of these countries was there it barely went below the 100 line in any of these countries. So why is this? What prevented that happening? I think the most important saving factor in every country, I think, in our study was the interventions that governments made to protect economies and populations. And this was starting from a position where in Australia 800,000 jobs went in a matter of weeks at the beginning of the recession. And so that obviously could have had a very severe housing impact, but because of income support interventions, and also to a much lesser extent, but something that we do try and analyze in the report, direct interventions that related to the housing system itself. And this table is actually in the the previous report, is in the second Australian report, the one that we published at the end of last year. But I've just put it up here again for reference. What we would see if we had a similar table for all the 8 countries, it wouldn't look the same, but it would look fairly similar to this. So the way that we've divided it here is we've divided it into the federal government responses at the top, and which were mostly around social security income protection, and the state government responses at the lower end of the table, which are some of which anyway are direct interventions in the housing system. So there's what we found, what we discuss in chapter 2 of the report is a very substantial amount of similarity across countries in the sorts of ways that governments try to protect economies, protect households from the consequences that would otherwise have occurred when people were instructed not to go to work, and a lot of people lost their income or their earnings from employment. So social security, enhancing social security was an important aspect of the responses in many countries. In the USA, that came through cash payments. In Australia, it came about through an enhanced rate of payment on some of the social security benefits. Sorry, I shouldn't use that word, payments. And in the UK, you would see a similar thing there as well. And a lot of the time, when those changes were announced, governments were a bit coy about explaining very explicitly what the purpose of them was. But I think the real purpose was that knowing that if you put a lot more money in poor people's pockets, most of it will be spent, and it will be beneficial. It'll circulate in the economy, and it will have a multiplier effect. And so it was done for that reason. And that really wasn't very explicitly announced, but it was effective. And in the Australian case, it had a dramatic impact on the distribution of income. In mid-2020, the lowest quintile income group had increased its income, or the typical member of that group had got an increase in income of 40% from what it was in Q1 2020. And the incomes of the highest quintiles fell back 10-20%, that kind of thing. And another important intervention, probably in many countries, certainly in Australia, but one which is a bit more invisible, was the willingness of the banks to be very tolerant about deferral of mortgages. And that was something which came about through policy. It was something that regulators and central banks realized was important and enabled it to happen. So it was mortgage lenders that were, the instrument of that, or the implementer of that, but they were given permission and given the liquidity to enable them to do that, or allowed to deviate from the usual rules about the amount of capital they must hold by regulatory changes or relaxations that allowed that to happen. And in Australia, the graph on the right is showing you how significant that was. As a percentage of all loans, over 10% were in deferral at the sort of mid-2020 mark. Most people found that they didn't need to continue that for very long. But that's a huge scale of relaxation, which helped to cushion the system. Another direct housing intervention that we analyse in the report across all 8 countries was around rental regulation, both in relation to preventing evictions and in some cases restricting rent increases and making payments to compensate for the loss of rent. So these are particularly necessary in countries where income support innovations, income support measures didn't include everyone. And in Australia, that was quite a large number of people who, because of not being permanent residents or being casual workers or both, didn't necessarily benefit from job seeker or JobKeeper supplement or JobKeeper wage subsidy. So in countries like Australia and the US, where there's something like between 10 and 12 million undocumented workers as well, who wouldn't have benefited from any of those cash payments, these sort of these sort of interventions could be justified. And the graph on the right, which is from the US, I think is a very a dramatic illustration of the effectiveness of rental eviction moratoriums, because there was a very complex picture that took place in the US with federal government, local governments, states and cities all taking action in this area, or some of the local administrations taking action in this area. But nationally, there was a period of restriction, which came to an end around about the 9th of August 2020, and there was a short gap before a new moratorium was put in place, and a huge amount happened in those two in that period of 2 fortnights, I think it is, in September or August 2020, and then there was a new restriction brought in. So the estimate is that nearly 2.5 million evictions were prevented up until July 2021 in the US as a result of this. If the alternate reality was carrying on as at this level, the sort of previous level. And as far as homelessness is concerned, we can see there's sort of two stories here. One story is that partly, or perhaps substantially, because of moratoriums on evictions in the private rental market, the flow of new people newly becoming homeless actually dropped in the pandemic. And from the figures, the latest figures we have, hasn't even gone back to 100% where it was at the beginning of the pandemic. So the graph, the top graph on the right, is illustrating a comparison of Australia and England, using figures that are, loosely comparable. The Australian ones are a bit of an innovation on our part, because these are not. This is reconfiguring the AIHW statistics on specialist homelessness service users in a different way, looking for more at the flow of people taking up those services every month, in fact, in this case, as opposed to the total number using those services in any given period. And the other thing that took place, the big sort of new action that took place as far as homelessness is concerned during the pandemic in every country here to some extent, is the emergency programs to provide temporary accommodation for street homeless people and others who were, potentially on the edge of that situation. So people who would be couch surfing, or people who are living in shelters that were considered to be a health risk because of having, too much density, or sharing of facilities that made it risky for COVID spreading. So in the Australian case, we think, from trying to piece the numbers together, which is extremely difficult because there's no government there's no government effort to do this. We think that at least 12,000 former rough sleepers, as well as others, were given temporary accommodation for some period. It might have only been days. In some cases, it was a lot more than that. It was months, and maybe even, stretching beyond a year in a few cases. But that was a large cohort of people who, some of whom probably would have been helped anyway, but many of whom would not have been helped, because there was a proactive effort to encourage as many people to come into what were mostly empty hotels as possible at that time, and substantial hundreds of millions of dollars unbudgeted expenditure was designated for that by some of the state governments in Queensland, New South Wales, Victoria in particular, and that definitely was a big story at the time. Numbers of rough sleepers on the streets went down very dramatically during that period, for at least 3 or up to 6 months, not to zero, but to much lower numbers than is normal. And the report also analyses some of the actions that governments have attempted to take to follow that through, by providing some of these people, some of the 12,000 in the Australian case, with longer term housing. And in Victoria in particular, that is that's a big story. That's something which is being provided for a substantial part of that cohort in Victoria, and some in New South Wales, but a smaller proportion. It was a very highly rationed offer. And the table at the bottom is illustrating the different ways in which these kind of emergency programs were organised, led, funded. Australia is sort of unusual there being a sort of state government initiative where the national government didn't really have any part in it, but it was a sort of organised activity. And I'll hand over to Chris.
Thanks, Al. Thanks, everyone. I'll aim to quickly take you through what we're thinking as some of the drivers of that glaring chart that Hal highlighted earlier in the presentation, and some of the themes that this international comparative method identifies, and then we'll drill down a little bit into how things get differentiated in different places. What are some of the things that apparently powered that takeoff in house prices against the expectations? Well, we had very low interest rates and also government support for that. Hal highlighted this in relation to mortgage deferrals, but we've had in a way that wasn't as quite as publicly remarkable as in the GFC, an extraordinary support for the finance sector by governments, and that stepped in very quickly without and headed off a crisis before it really happened. So things like the RBA's term funding facility and the quantitative easing the program that it embarked upon. Really the banking sector, compared to, say, the nation's banking sector pretty much held the nation's landlords' beer in this crisis. While the landlords made a spectacle of themselves, the banks very quietly got on with business, lending to people. We had direct government housing stimulus in a few of the countries of housing activity. So in Australia, we had Home Builder, originally a $650 million stimulus program for housing, quickly turned into a $2.5 billion stimulus program for housing construction renovation. Similar stimulus measures we saw in UK and Ireland, and the mortgage guarantees, a little bit of first home buyer assistance, targeted assistance for first home buyers who, as in the GFC a decade previously, you can see them in the housing finance charts as this spike of home lending that has rushed into what it thinks is an opportunity to get into the market in response to some cash grants and low interest rates. We've also picked up, and we'll get into this in the next slide, consumer changes in consumer behaviour and the importance of one's private domestic space to working from home and having a comfortable place in which to quarantine or isolate. That appears to have driven some significant shifts in housing demand that's played out in both the house prices and in the rental market. Although there was a bit of an income hit to some households, as Hal pointed out, there was also an expenditure hit in holidaying and restaurants and other things. And so even with that income hit, there's been savings that can be put into, levered into housing spending. And in the report, we go into this in a bit more detail for each of the countries. A little about that shift in housing demand and what the the Bank of England characterised as a race for space that it's picked up in its analysis of that's the house price index and its growth, and how much of that growth the bank has been able to account for in different types of properties turning over, houses rather than flats. Also, the increased value of houses rather relative to flats, and also price rises outside, in this case, London. And this is, as we'll come to in the subsequent slides, this metro regional differentiation is a bit of a theme across the countries. Looking at rental markets, we'll look at the Anglophone countries first, because they had an experience. You can see there in the chart, that's a bit different from Spain and Germany. So we had in the early days of the pandemic, in that first harder lockdown phase, if not an outright drop in some rent levels, at least a pausing of rent increases, and rents converged on a flat increase, no change for at least a point. And then fairly soon after that initial lockdown phase, they started taking off in all of these countries. And as you said, in fact, rates that we haven't seen for over a decade, rates of rental growth. Drilling down a little further and starting to differentiate experiences in the countries we looked at, we saw as I say, in the metropolitan markets, a bit more of an impact, and those major cities had, some of them had quite a dip in rents. Sydney and Melbourne in particular, as relatively relatively exposed to international demand, did actually have some rent declines in the early part of the pandemic, but they took off again afterwards. We've looked here at this, looking at Australia in particular now. There's been quite a divergence between the capital cities and regional rents over the course of the pandemic. As you can see, the regional Australia rents have gone up really quite drastically, 25% over the course of the pandemic. Australian capital cities in this chart, looks flat, but that's really Sydney and Melbourne doing that. The other smaller capitals have also had some increases in rents, and again, reflecting the international exposure of Sydney and Melbourne, and the loss of the international student market and the international worker market, but also people rearranging their affairs around work from home. And there you can see the smaller capitals and how they've had an increase in rents, while Sydney and Melbourne have been flat. Other factors that might play a part in this regional story, while international tourism has been on ice for 2 years, a domestic tourism that also paused in the first part of the pandemic has taken off again, and I think the Airbnb factor, which has had patchy effects previously, and where it has had an effect, quite significant effects, I think that's become more prevalent, more widespread, particularly as a contemporary factor to a residential shift in the regions as well. Another thing we noticed, particularly in the Australian context, was in the regional rental markets, when we look at the bond data, there was a slowing down over the pandemic of bonds turning over. And so it looks like looks like regional households who might in an ordinary year have moved out, they might have even moved to the city. They've sort of bunkered down in those regional centres where they can. So there have been fewer places coming up for rent. And when they do come up, those who have had to move for whatever reason and who are finding themselves in competition with incoming work from home tree changes or from domestic tourists who are now looking at this place on the Airbnb market. They've felt a really drastic constriction in their housing options. We haven't got the chart here, but another colleague showed me another ABS chart of turnover in property transfers, mostly sales, and property transfers in the regions have just taken off in the pandemic period. So it's really been a storm, and in some places quite literally a storm as well, of factors that have created quite acute stress for regional households, regional renters especially. Again, another level of differentiation is houses over apartments. We've seen that in Australia. We picked up some data from Ireland as well that shows that also goes to this race for space playing out in the rental market as well as in the home purchase market. Slightly different stories in Germany and Spain. So Germany had some pretty big increases going into this and had introduced some rent restrictions ahead of the pandemic. Their rents have gone down throughout for the most part. They went into the pandemic perhaps a bit better prepared than Australian states and territories and the other countries that we looked at. In Australia, we did have, as part of that early eviction moratorium response, we had 5 of the states prohibiting rent increases for the first 6 months or so. And it was really when rents started taking off again that they lifted that restriction. When it was really needed, it wasn't there. Germany's got a bit more, even though it started off pretty high in some places, they already had a rent regulation stronger than other countries. Spain's had prices and rents fairly subdued throughout. And I mean, the obvious candidate for that is Spain's outsized tourism sector and how it's been affected by global restrictions on movement. Affordability impacts. Well, those rents have gone up a lot. Earnings not so much. So in all of the countries we looked at, rents for this period have outpaced changes in earnings. And so that's even worse for those. It's even worse in the regions where the increases have been so great over the last 18 months or so. Summary and conclusions. Shall I hand back to you for this, or I can do it? So we have seen some profound impacts from COVID-19 pandemic on housing markets, not the ones that were originally forecast. Lockdowns and work from home really have shifted demand for housing, the sort of housing demand, where it's most attractive to be, and we'll see just how enduring those changes might be, those shifts in demand. Those restrictions on international travel have had, there's been quite a differential impact there. Sydney and Melbourne, especially, but other centres in Australia have been affected by nearly so much. Similarities, high-level similarities between the Anglophone countries around housing markets and rental markets. housing consumption behaviour highly sensitised to the cost of debt. Well, that was something relied on by governments as they restricted as part of their stimulus response, as they brought interest rates way down and opened up supported lending by other means like the cheap finance to the banking sector. Will there be I mean, now the talk is in the inflation that we've seen in various sectors may call for a monetary policy response, interest rate increases, and will that result in a deflation of the recent price boom? Possibly, although there are other ways of looking at the inflation problem that we might have at the moment. Those rents aren't caused by tenants taking on too much debt to pay their rent every week. It's inflation as a fight over income that some economic agents are better able to conduct than others is probably where the policy attention needs to be rather than interest rates. We initially had, again, we had things like eviction moratoriums, bringing homeless people in from the streets and getting them housed, and income support. As we put here, remarkably egalitarian response in the early days of the pandemic. It went as far. It continues to be felt in some states in social housing, increased social housing commitments, and increased social housing pipeline in some jurisdictions, but that's not been the case for all Australian states or the other countries we looked at. And really, a much larger response has been in just stimulating the renovator and home purchaser sector. So many of those early egalitarian responses have ended, and sort of written a report about them as a way of trying to remember them, because otherwise they're being memory hold. There hasn't been. There's a few exceptions in other countries that we've noted in the report where there seems to have been a lasting impact on reform agenda. There's been some tenancy law reform in Ireland, for example, that has picked up on the experience of the pandemic, but that's more the exception. In most places, there's been this. We've been having. I don't think it's too cynical to say, but having supported against the earlier expectations of an asset price, having supported asset prices against an earlier expected decline, those initial egalitarian supports that kept people in their homes, kept incomes in households, and moved people from the streets into temporary accommodation. Those sorts of things have been allowed to go by the wayside. So we still, as we say here, we still need a more fundamental reform and perhaps a greater remembering of what was done in the early days when things looked urgent and bleak. Thank you.
Thank you very much for the talk, Chris. I'll open the floor for questions. If you want, you can use the chat, and I'll read out the questions from the chat.
Or anybody in the room for that matter.
Do you think that the homelessness interventions had any effect on the broader housing system at all? Ones that you discussed earlier on, or were they simply temporarily beneficial for that group?
I think they were, well, no, I think they were beneficial for beyond that group, but not because of, but for a public health reason. I mean, I think that was really the justification for, or the health advice, which I'm sure was, you know, underlying decisions that were taken to suddenly, you know, discover hundreds of millions of dollars to pay, you know, for thousands of hotel rooms. That came about because of the belief that overcrowded shelters, for example, were going to be breeding grounds and for COVID at a time when the feeling was we really needed to, not now, but like 2 years ago, when it was important to try to achieve zero or to keep numbers down in the very, very low numbers. So, and it's been demonstrated, there's epidemiological evidence that that these actions, these decisions to put people into self-contained hotel rooms where they didn't need to mix with others, they could observe, social distancing and lockdown rules, which they couldn't where they were before. That it's been demonstrated that that had a measurable impact in reducing deaths in the UK by comparing it with the US, which was a sort of, in some parts of the US, a do nothing comparator. And the same is true for eviction. There's also epidemiological evidence to demonstrate that slowing down the turnover in the rental market through eviction moratoria also had a measurable impact on reducing the transmission of the virus.
So public health impact, but not necessarily a housing.
Do you want to add to that?
Just in a very narrow way. Something that came up in the second report relating to boarding houses. And I spoke to some boarding house operators who observed a market impact on them from the international students were gone, and that meant a whole lot of their clientele were, they suddenly had other options. So they had people moving out into studios and things like that. And some of them took, made the decision to not bring other people in, either for distancing reasons or just because they just wanted to keep their existing household suite. But that, I mean, that's a little sector.
Yeah. Good, thank you.
We have a question on chat. Did you find that the different proportions of public council housing had any discernible impact on outcomes?
Not sure how that would work. We didn't really we didn't focus very much on social housing, on the effects on the social housing system in the research. In the first report, we looked at it to some extent, but I think after that, we kind of somewhat discounted it because it seemed as though it was highly insulated, that the people living in, certainly in Australia, if 90+% of people living in social housing are their income is from benefits, which were at the early part of the pandemic substantially increased, then that part of that sort of concern that there was going to be a kind of tidal wave of rent arrears and some of the not-for-profit housing providers were suddenly going to go bust. The opposite occurred. People, some of the providers anyway, I haven't seen statistics on this, but I've heard people say anecdotally that rent arrears, far from exploding, actually went down certainly in the early part of the pandemic.
Yes, I mean, putting aside for the moment what was a horrible case of the way the towers in Melbourne were locked down and that draconian action there. Generally speaking, the social housing sector had a pretty quiet one, had a pretty quiet pandemic, and in a way because the system of income-related rents was set up for an income shock, and as Hal said, what in fact happened, the system of income-related rents would protect households if their incomes changed dramatically downwards in a recession like we saw in the early part of the pandemic. But then with this income support for lower income households, the policy decision of particularly the state housing authorities, that additional income wasn't going to be collected as additional rent in the income related rent system. They said, no, that's yours. And for lots of tenants, who were in arrears already, the way they used that money was to pay down their arrears. So there were some win-wins for the social housing sector out of the way it deals with income and the income-related rent system.
Thanks, Chris. And we have Bruce.
Oh, thanks. One comment and then a question. The comment, and they're both about rents in Australia. So it's interesting that the Australian Bureau of Statistics Consumer Price Index is something that many people are not aware of. It's actually a capital cities index. And so it doesn't actually collect any rent information about non-capital city rents. So the sort of data you've been showing means that prices on average across Australia have actually gone up more than the CPI is suggesting, which is worth paying attention to. We're looking at broader welfare implications. And my question is about what do you see as the future for rents, in particular the race for space. Will that be unwound, or do we need actually a substantial increase in housing supply in order to bring rents down?
Shall I start?
Sure.
I mean, I think, yeah, I mean, it's very difficult to predict how much the changes in working practices and the ability to work from home that we've seen over the last 2 years might revert anywhere back towards where it was before. We really just don't know. I think we can all be pretty certain that some of it will be retained. So there will be if that's the case, then there's an enduring impact of this race for space and the, changing housing consumption preferences as a result. What is there a need to increase supply to normalize rents? I think yes, but I think the most important change in supply isn't so much about the total quantum of rental property available. I think it's a lot to do with the fact that so little of it has been turning over in the last 2 years, or maybe it's beginning to come back now, but certainly up until the end of 2021, you really couldn't see that. Unlike the house sales market, where there was a huge uptick in transactions, when prices were shooting up, a lot of people decided to put their houses on the market who otherwise would have not done so straight away, or would have done so before, but had stopped, had decided not to do so. So the number of house sales transactions in the last 6 months or so has been at a record level in Australia, far above the sort of 10-year norm. Whereas the level of changes in the rental market, or properties coming available for rent, has been 25% below the 10-year norm, and probably a lot more than that below in regional places. So I think yes, it is partly a question of the quantum of properties that are available, and some of the people who are part of what we're seeing is a result of out-migration from major cities, people doing that tree change, or that sea change that they can do without having to give up work. And some of the properties that they're buying, they're taking properties out of, some of those properties are coming out of the rental market. So it's having that indirect effect. And some people are moving to a region and renting a place to begin with, at any rate. So we think those things have had an effect. That some of that will probably wash out if we resume more of a normal situation. For example, with the international border being open and international travel maybe in a year, or less, perhaps even, the ability to, without much thought about it, decide to go on an international trip, which at the moment people still are not doing, even though technically you could. Few people are, but it hasn't come back to anywhere near the level that it was at before, which is one of the factors that generates turnover in the rental market. You give up your tenancy because you're going overseas. Well, that may come back, and I think we should expect that it will come back to some degree. So that will moderate the situation a bit in terms of supply. But at the same time, if that's the case, then if international travel is relaxing, then migration to Australia will also be affected by that. So you'll have the opposite effect. So those two things will, to some extent, cancel each other out, I think. Do you want to add to that, Chris?
I would highlight what I think is a policy implication, which is that we've had quite sudden and large rent increases in, particularly in regional areas, and as you say, Bruce, there's a question mark over how enduring the underlying shift might be, the underlying shift in demand for housing. In the circumstances, I think that the response should be restrictions on rent increases, rather than a lot of the advocacy has been around more social housing, which I'm all for, but the particular nature of the emergency for low-income households in regional centres who are not one of the households who've been able to batten down and resist the turnover in tenancies and find themselves in competition with tree changers and domestic tourists and are really doing it tough. A restriction on rent so that money just doesn't push them aside, and in 2 years' time, when the tree change didn't work out, maybe they get the house again. Or if the tree change works out and the price signal is finally received, there's some additional housing built there. That doesn't come quickly enough, and you need to do something in controlling rents, I think.
And I think that the debate about rent control or rent limitation, perhaps we shouldn't use the term rent control, because a lot of people have, from that, the immediate image that comes is something quite draconian, really, where government is setting rents, dictating the rents across the whole market. Rent control actually can come in many different varieties. So rent limitation can be something that's much more light touch than that, and could be something, it is something I think we're starting to actually discuss again. And I think even in Australia, where it's really not been talked about very much until just the last few months, really. And this comes about partly because of the kind of extreme situation that we're seeing in some regions at any rate, and also because internationally, that's a debate which has been taking place in the last 5 or 6 years, actually, or part of the last decade. And Scotland is actually sort of proved to be a kind of pace setter here by introducing a whole set of rental reforms in, I think, about 2015, which included the ability to have a sort of emergency imposition of rent increase restrictions. And a number of other countries have followed on from that, have taken a leaf out of that book, both in relation to the security of tenure reforms that were part of it, and also in at least a couple of cases, rent restriction as well. And there's been an enormous amount of debate in certain European and North American cities about rent control as well.
Thanks, Al. So we're almost running out of time. We have 2 more questions. One from Sinju. One left.
Hello, Hao and Chris, and I have a question on the rental market change. And we can see a reduction of rent inflation in many countries in mid-2020. And at least in Australia, I think this is related to the impact of travel ban. And we also did a survey to some international students in that period that they initially kept paying the rent even if they were stranded overseas. But gradually they found that there was no hope in the lift of travel ban, and many of them decided to terminate the lease in the second quarter of 2020. I guess this might partly explain the downturn of the rental market in 2020. But what factors contribute to the later resurge? As the travel ban only lifted recently, right? So I'm not very clear about that.
You're saying how is it that the rental market began to recover even when the travel ban stayed in place?
Yes, exactly.
Is that what you're saying? Well, I think it's only recovered very, very slowly and erratically in the areas of inner Sydney and inner Melbourne, where, for example, in inner Melbourne, the vacancy rate is still over 4%, which is very unusually high, I think, for anywhere in Australia, certainly for Melbourne. And in Sydney, it's fallen, but it's still over 2%. So I think the answer is that some of these areas still remain places where it's relatively easy to find. There's quite a lot of rental supply available, and also you can get it at prices that are at the same as or less than they were 2 years ago, still even now.
And thanks. And here in Hong Kong, it's while the housing sales market shows a very similar trend to most Anglophone countries. Actually, the rental market here experienced the up and down periodically, largely in line with the pandemic situation. And here we are now experiencing the 5th wave of pandemic. And this is because of the large number of mainland Chinese students in Hong Kong, and they may choose to retreat to mainland if the pandemic outbreaks and the university teaching transfers to online mode, and they will come back if the things change better. So yeah, thanks. Yeah.
Thank you.
Yes. We have 2 more questions on chat. We're almost out of time as well, so it's up to you. You want to take the questions? Or?
Yeah.
Okay. Sure. So let's go. Kerry Hunter says, "Thank you for this work. In light of your findings, do you have any comments in the context of Federal Parliamentary Committee's Housing Affordability Report?"
One minute or less.
What's the connection with that? I don't even know whether the word COVID is mentioned in the reports, but I think their solutions are all around the supply side. We've been talking about supply, but I think not really focused on the rental market, which is probably the bigger focus of the talk that we've given, and more around the house sales market. And I think, feel that some of the assumptions that underlie some of those recommendations are a bit one-sided. Do you want to add to that?
Jago Dobson says, "Thanks for the research. Could you comment on whether you think COVID housing policy responses signal a strengthening of state willingness to more actively manage the housing systems? Or is this exceptional emergency response blip in the longer run pattern of marketization, finalization of housing systems?" Chris?
Yes, good question. And it was, it looked like that, didn't it? With eviction moratoriums and rent restrictions and homeless and the homelessness response. And even things like stimulus is, I guess that's an enduring, well, that's a reminder of how governments do intervene and manage housing market outcomes, even if we think that they're going in the wrong direction. I think, as I tried to sum up at the end there, I think for me, it's the lesson of the pandemic. Well, it's how those early responses, once a financial crisis was averted, it's like that was the crisis to deal with, and those other housing crises that also became alive at that point. Once we averted the financial crisis, too much of it moved on, and too much of the and there's so little to show of the way we responded to evictions, for example. These sorts of things we did in the emergency, we could always do. We could always make it increase the scrutiny given to eviction proceedings before they happen. And it's I guess it's the work of reports like this to try to keep those embers glowing a little bit, because they've gone dim over the 2 years.
If I could just add to that very briefly, I mean, there is a tangible outcome which will extend for 2, 3, 4 years after the pandemic, which is very relevant to this topic, which is something we just mentioned very briefly in the talk, which is the decision of some state governments to spend quite big on social housing investment as part of an economic recovery program. There are 4 out of the 8 jurisdictions in Australia that chose to do that. In a way that really is, breaking the mold of the usual limitation. Well, some of us would quite like more not-for-profit or public housing, but we're not going to. It's not our job to pay for that. Well, if the Commonwealth wants to fund us to do that, great. Otherwise, no. How do you expect us to do that? Well, 4 states said, no, that limitation is no longer there. We're going to do something which goes beyond the normal limitations. And that will mean that there's about more than 20,000 additional social housing units on the ground in 3 years' time than would have been there otherwise. But unfortunately, you have to note that the 3 states that did this significantly are all under one political control. And it was something that most Labour states did, and all Liberal states didn't do. Tasmania may be a slight exception, but it's a shame that New South Wales, South Australia didn't buy it.
Thanks very much, Carl, and thanks everyone for making this seminar a success. And we are running 5 minutes over time. Thank you very much, everyone. And so it's good to see people in the lab. So we are starting to do physical seminars again. So from next seminar onwards, there will be a separate ticketing for physical seminars. I don't think we have a limit anymore on number of people. So, but there should be still around 30 people around this room can hold. So the next event is at 8th April. So the event invite should go out soon, by next week. And thank you very much for our speakers, Hal and Chris. And we also have an event in Roundhouse, right? So
Yep.
yeah,
Great,
so
great.
so we can continue the discussion over at Roundhouse. Thanks, everyone.
Thanks, Hal.